Assalamualaikum warahmatullahi wabarakatuh, everyone. We are back here to examine this question. Are the Malaysian banks making too much profit? Before we go into the answers, we need to go back to some of the fundamental issues surrounding banking business, conventional bank as well as Islamic bank. And that has a lot to do with banking capital, the use of banking capital, not to make loan, but to support these loans, and the use of the deposit funds to make loans. And there's a lot of complicated relationship that we should be able to dialogue so that we can really understand what would be our expectation on banking profits or banking profitability, in the midst of the Malaysian economic scenarios today. With inflation, with a weak ringgit, and with the pulling of the diesel subsidies, and many more to come. So we would like to understand a bit more of the economic repercussions and to what extent the banking business, is impacting the economy. In view of the fact that liquidity is much needed by the public, in order to expedite their respective transaction, whether these are dealing with businesses or consumption or, government expenditure. So let us just get into this discussion. First, we must be able to see that the banking we are dealing now today, whether conventional banking or Islamic banking, these are the deposit-taking banks, right? These are the deposit-taking banks. And from the Islamic perspective, we are dealing with deposit-taking banks that facilitate the deposit mobilization using the riba contract. So what would be the implication of using riba-based deposit in the banking business or interest-bearing deposit in the banking business, right? Whether we are dealing with conventional bank or Islamic bank, both banking system are driven by deposits. So meaning that in order to make loans or in order to make murabahah or tawarruk, these banks are using deposit funds instead of capital funds. Of course, in the conventional bank, deposits are mobilized using interest or riba, while in Islamic banking, deposits are mobilized using the profit-based murabahah, commodity murabahah or tawarruk, right? So we can say that bank use deposit funds instead of their capital funds to make loan. And we know that the size of the deposit funds are much more bigger than the size of the capital fund. So not usually it is 10 times bigger. The deposit funds are 10 times bigger than the capital funds. So for example, if you have deposit funds of $100 billion, then the capital fund will be about $10 billion, right? So in a sense that when the bank uses deposit fund to make loans, instead of the capital funds, then there seems to be a trouble here, because banks may care less about making good loans, or banks may care less about loan default, since they are not using their own money, that is the capital fund, to make the loan, but they are using other people's money. They are using the depositors' money, your money and my money and our money. So moral hazard can really disrupt prudent and safe lending, much required in the banking business. The moral hazard that I'm referring to is, of course, the fact that bank can be irresponsible, bank can be overly aggressive in making loans, because they know that if there are losses, the losses will not be affecting their capital, it will be affecting the other people's money, that is deposit money. So to ensure that banks are making prudent loans, to ensure that banks are making safe loans, since they are using other people's money to make this loan, the Basel system, the Basel regulatory capital adequacy ratio, is instituted, right, to protect deposit funds from the moral hazards of banks' aggressive and irresponsible lending. So the deposit funds are the funds placed by the household, by businesses, by government agency with the bank. But because these funds are not capital, they belong to other people and not the bank. So there is a likelihood that the bank can be negligent, can be lazy, can be irresponsible, making loans to people that are not deserving. That can impair loans, right? So when there exists some kind of moral hazard in the form of aggressive and irresponsible lending behavior, this can impair the banking loans, turning loans into big losses that can cause a run on the bank, and bank can become insolvent. That can eventually ignite widespread economic chaos. So in Islam, this chaos, the maslahah of the people is under a great threat. So we must be able to understand this, that when funding is acquired through deposit taking, when funding of the loans or murabaha or tawarruk is coming from deposit fund, and because these deposit funds are based on riba, where the deposit placement is fully guaranteed plus interest, and the same is for tawarruk deposit, where the tawarruk contract will guarantee full deposit redemption plus profit. So this kind of deposit structure, will develop or will produce this moral hazard, that will have great potential to disrupt the economy. So one of the main culprits in the economic downturn, when banks become insolvent due to the high loss from default, so one of the main culprits is the deposit funds that are based on the riba contract. Because the riba contract guarantees deposit placement, and the riba contract guarantees the interest income. So when these deposits are fully guaranteed at maturity, and the interest income is guaranteed at maturity, or they can be withdrawn on demand, then we can conclude that the deposit funds are free from risk, right? So deposit funds are funds with zero risk. And this is again a very important event to take lesson from, because when the deposit funds are zero risk, or when the deposit fund do not carry any risk, then when the bank uses this deposit fund to make loans or to make murabaha or to make tawarruk, who will be bearing the risk in the loan? Who will carry the risk in the sukuk or in the bonds? Who will be responsible if there is a loss from default? So these are questions that we must be able to answer. And of course, the answer is that this risk in the loan or risk in tawarruk and murabaha will have to be carried by the banking shareholders, because the risk in the deposit are zero. Thus, any risk in the loan funded by deposit will have to be carried by the banking company, and these are the banking shareholders. Okay, guys, I'll see you again in the coming videos. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.